If we can, with the Bulls and Bears. First, the Bulls, Dan North of Euler Hermes, Paul Schatz of Heritage Capital, and the Bears, Ron Shah of, is it Jina or Jina, Ron? Jina Ventures, and Lee Munson of Portfolio Asset Management. Now, to my utter dismay, he was a bull, like right up to just a few days ago, and now he has lost his nerve, his soul, his spirit. Jay Thomas and DiPaolo are in the mix as well. Lee Munson, let's put you under fire and start right here, because you've been bullish every time you've been on my show, and now suddenly I'm reading the notes here, and it looks like you're getting a little namby-pamby here. You're getting to be a fraidy cat. What happened?
Well, I'm not, Dennis, I'm not here to be, bullish or bearish. I'm here to be right. Yesterday I was nervous about some of the market action. I wasn't expecting the type of sell-off that we saw. We have a lot of resistance, especially you have been a fan of Fibonacci retracements. We're getting into some of that right now. And I was one of the few traders who was making money on the short side, fading the Fed move. So I'm short-term bearish, Dennis. I'm long-term bullish. All my long-term portfolios are investing more money. We use the pullback.
So Dan North, Lee Munson takes some chips off the table, and the Dow rises 120 points today. You get stung if you lose your nerve.
Oh.
Well, I think we're definitely bullish on the economy. There's no question about that. We've been coming out of the recession for some time now, and if you look forward in the intermediate or long term, if you believe the economy is going to grow, then certainly the stock market is going to be the place to be. We've come awfully fast, so there may be a bit of a retracement, but in the long term, yeah, I think that's a very good bet.
Jay Thomas, I've been arguing, because you're a radio host and you kind of get some good of the middle America there. Right. But I've been arguing that this recovery, which everyone else says is going to be pokey and punk, it actually might be a little better than a lot of people think, and that would send stocks up more. What is your gut on that telling you?
I live in Hollywood. I think this is all PR, to be honest. This reminds me when you get divorced and they go, oh, you're going to be better in a couple of months. You're going to feel better. I think we're in for a very painful year. I think we're in for another painful next year. So many people have lost their jobs. That's why everybody's working so hard, and productivity went up because they're afraid to lose their jobs. I'm also in real estate. Sure, you can buy anything you want, so housing goes up. In Santa Barbara, California, we have $800,000 condos selling for $350,000. That's why the economy's going up. The cash for clunkers thing, that's another crazy deal.
But Paul
I just think it's all Band-Aids, Band-Aids.
But Paul Schatz, I actually think that when an $800,000 house sells for $350,000, the person who bought it at $350,000 is added to the economy, is actually going to create some wealth.
Dennis, what you just mentioned, that's called deflation. And that's the biggest problem we're facing right now. All these inflation.
Come on.
800,000 to 300,000. There's only one word for it. It's deflation.
It was never worth 800,000 is the problem. That was the bubble. Deflation is off. We're not even worried about inflation, much less deflation. I thought you were supposed to be a bull.
I am a bull, but if you ask me what are the problems on the horizon, I'm more worried about deflation and inflation. Bernanke would celebrate. He'd dance around Wall Street if he could somehow put inflation back into the economy. And yeah, bullish, absolutely. I think we're going to 10,000 at minimum by the end of the year.
Oh, by the end of the year, 10,000.
Yeah, but do you think that?
I'm sorry?
Do you think that lower commodity prices are going to give some headwinds to most of the components of the S&P 500, though? Do you think that that's going to help if we deflate on commodity prices? That's going to be good for stocks?
It's so funny.
Anybody.
It's so funny, the whole correlation with commodities. In the 90s, it was the opposite. The commodities went down, 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 down. The market went up, 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 up. All of a sudden, a button was switched this decade where commodities and stocks and everything started to correlate. That's not good.
Right. Let's go to Ron Shah for a more bearish view. Ron, I think you bears are getting it wrong here in terms of the pace of recovery. Businesses cut back so deep and so fast, and inventories are so low, we could see actually a much bigger rebound than you know.
Well, you hit the nail on the head. I think the key for a rebound here is going to be growth and expansion, and the way we get that is overseas. Our consumers are yet not buying. Businesses are still not spending at increased levels. The Fed is doing a good job of this easy money program to buy time for American companies. They're only doing half the job. The other half of the job is to incentivize American companies to go overseas, to get revenue, to get growth. That's the only way we're out of this.
Right. Okay. Are we going to wrap now, guys? Control room? All right. We're going to wrap. Thanks very much, gentlemen. And we're going to